We're going to start it off and let our panelists introduce themselves, where they're from, and then we'll get right into the discussion. Go ahead.
Hi. Hello. Hello, everyone. Hello. Is the mic okay?
Yeah.
All right. So, good morning. Good early morning to everyone. I'm Shah Mohammad. I'm from Malaysia, representing TradingPRO and Trading Plus. So I've been trading as a trader. I started my career as a trader almost 10 years now. All right. So I scale up my skills from trading and my patience to become as a market analyst. So I'll do analysis every day. Yeah. So I have done more than 3,000 analysis so far. Yeah. And my patience into trading got me to become as the head of global sales for TradingPRO. So I've been traveling around the world, meeting all the traders, the clients and partners, and have a good relationship with everyone in the trading industry. Yeah, that's me.
Hey everyone, my name is Zulpha and I currently work with JustMarkets. I've been in the FX industry since 2011 and yeah, thank you for having me.
Thanks, Adam. Nick Beukes from Agrisa Commodities. We're physical commodity traders based here in Cape Town. We handle various general traders, so we do softs, that's the agricultural side, and I'm head of metals and minerals. We typically do around 800,000 tons of various products in a yearly basis. Yeah, so excited to be here. Hopefully I can contribute.
Exactly. Well, good morning, everyone. My name is Francois Plessis. I am the market analyst for ATFX Africa. So I'm based here in Cape Town, so from South Africa in that essence. And yeah, I've been trading and working in the financial industry now for about 11 years. So going to use some of that knowledge to contribute to this discussion today.
Wonderful. Shah, why don't you start us off and tell us why gold is where it is? We're going to start to kind of build up. You know, gold's had a wonderful run this year. Been one of the best trades going for really a long time if you stretch it out. What's brought us to here? What are the main things in your mind really that have got us, especially this year, to where we're at?
Yeah. So for gold, this year, I think it started from last year actually. But this year itself, I've seen the market movement every time, because in Malaysia, it's always in Asia's sessions. So every time 6 o'clock in the morning, wake up, and I've seen the movements is very aggressive, especially in the Asia sessions. It can goes up to 500 pips. Yeah. And when it turns out to the London to New York sessions, it can goes up to 1,000 pips. So from last year, what I have seen is that is one of the geopolitical war is happening in the Middle East. Is happening, although besides the U.S. index is going to lowering the interest rate, but gold and the correlations between U.S. index. But the main things that I see in the market for the gold is because of the geopolitical war in the Middle East. So, but the movement comes with the Trump tariff rates happening is even more aggressive. So every morning that I wake up in the Asia sessions, it can go aggressively. So I think, so if you are as a trader, you should minimize your risk. Yeah, that's the point.
Nick, I mean, you work on the physical side, and I'm curious to know where the demand is coming. You talked about sometimes you see in different sessions, you'll see strength from gold, you'll see weakness. A lot of times I see early in the U.S. morning, you see some selling there. But when on the physical side, who is buying and holding gold?
Oh, thanks, Adam. Look, from our point of view, it's the Asian market. I think Shah alluded to that right now, on a jewelry basis. And it's simply, in our view, it's an inflation hedge, a permanent inflation hedge. I think anyone would be ill-advised if they didn't think it was that. If you look at what happened in the last 5 years, pre-COVID to post-COVID and the massive rise in the gold price, in our view, it's simply just an adjustment for the amount of dollars that were poured into the system. And I think anyone who wants to take a long-term view of safety, a long-term view of protection, they would always do well to buy gold. I was telling you before we started, when I began my career, it was in the previous century, millennia. The gold price was $250 an ounce. And it's unbelievable if you take that time period, which is not even that long, one generation. It's a totally different game now. So the sources, the demand side, in our view, is number one, jewelry. I think families in Asia like to own jewelry. They want to own jewelry. And I think it gives a level of comfort in terms of security that they feel, if something really does happen, they've got something in their hand. And I know it might be a bit of a primal type of feeling, but it's a real thing. And I think the other source of demand is the traditional central banks and investments, which are mostly in the Western world. So those two combined make up the demand. But if you keep in mind that the mines on the planet Earth consistently produce about 2,000 tons a year of gold, which is about a 1% per annum growth rate in real physical gold. And those mines are getting deeper and more difficult to find and harder to mine. So there's a consistent challenge getting more gold out of the ground, physical gold out of the ground. And at the same time, the demand realistically doesn't seem to be stopping because of that, and I call it a primal need of people just to feel safe that they've got something in their hand. So that's our view on the physical side of gold.
Francois, when I think about gold, I've been writing about gold forever and dealing with gold people, and they're the gold bugs of the world. And they have been talking, a long time ago, or a number of years ago, with some crazy ideas. De-dollarization, massive fiscal deficits that are out of control, a breakdown in the global order. And then you skip ahead to this year, and you wonder, were the gold bugs right about everything?
I think in that regard, and it's similar to the conversation we were having earlier, I think it's a very big possibility that, yes, they were right about all of this. Because if you have a look at that, if we have a look at central bank demands from countries such as the BRICS organization and so on, yes, there is that increase of demand and that de-dollarization that is taking place in that regard. And that is definitely pushing gold to heights we haven't seen before.
Is it for real, though? Are
personally,
really
I believe there is a certain bubble attached to it. Okay, and we will at some point, from a trading perspective, we will have to see some form of a retracement. But again, looking at that aspect, we have to, as traders, we have to also be cautious about it, because traders always want to predict where's the top, where's the bottom, and if you are gonna try and consistently predict the top, gold might just bankrupt you every single day and twice on Sunday, But in that regard, if we as traders consistently just focus on what's happening in the market, have a look at everything from a holistic perspective, what is priced in, what is not priced in, and you're not trading directionless, okay? At the end of the day, as a day trader myself, yes, like you stated earlier, in the beginning of sessions, we see some pullbacks in gold. It's not just bullish the entire time. And as a trader, you need to be able to adapt to that. You need to be able to take those short trades as well. But if you lose sight of that bigger picture, that could definitely put you on the wrong side of the market. So do I personally believe that we have gotten to the ceiling? No, I do believe there is still some room for growth, especially if the US comes in and drops interest rates again. That could push gold to new highs. And as you said, those gold bugs in that sense, predicting world chaos, which is kind of what we are looking at right now, with geopolitical events just continuously escalating. This could just push that price so much further, but we shouldn't get stuck in one directional bias at this point in stage with regards to it.
Okay, so even though we're talking about a lot of these things, starts to worry me, right? So de-dollarization, breakdown in the global order. I mean, America is doing things they've never done before, and gold is already at all-time highs. So you start to worry that all the good news is priced into gold already. So Zulpha, I want to ask you, what can go wrong in the price of gold now? What could take it down, and what could materially start to make people rethink? Maybe this is too much of a crowded trade, and things can change in the world.
Look, we obviously know that the price of gold is where it is now because of it being a trade-off market, right? So what could go wrong is that, or what caused it there is because we have irrational Trump right now. So what could change that is if he basically becomes more rational and people are able to stabilize and deal with that, everybody else will start moving their trades back into where they were actually trading and move away from gold. So that should stabilize it a bit, and yeah.
Oh, very good. Trump is such a wild card, even just in the past week. Tariffs on Europe, tariffs off Europe, and then courts take away the tariffs, and now they're back on the tariffs. And, the instability itself kind of becomes good for gold. At some point, maybe Congress takes away the power. Let's say some of these things start to go wrong for gold, and Trump gets ratcheted in. I'm kind of the belief we're at the peak of his power, right? After you get elected, kind of have your 100 days, and we're now just past that. Congress at some point says, all right, enough, like settle it down, or we actually do make some trade deals, and the noise comes down. What then becomes the floor? I want to ask you, Shah, what are some of the levels, I think, 'cause as traders, there's good news, there's bad news, but ultimately price levels are where you're buying. Is there a floor at 3,000? Is there somewhere below 3,000 you would really like to buy?
Yeah. So thanks God for the from US court ban yesterday. So it's been a haywire. Some lift up the ban. Raise the interest tariff and start to halt the tariff, and the markets goes along. So I've seen on the previous 2 or 3 years back, I've used this leading indicator via Andrew Pitchforks. So my key level is only up to 4.236 Fibonacci levels to find the cycles. But after the COVID, and I have to extend the key level up to 6.854 Fibonacci levels. So the gold market has break the key level of 4.236. It's a cycle. Actually, it's a cycle because I have been making the analysis since 2018 to find the key level of the cycles. So have you seen the COVID time? Okay, it hits one cycle, and now after Trump's administrations, it hits more higher and higher. So I'm looking at the gold is now consolidating around 3,200. It might be dropped below 3,200 to 2,800 else, but the continuations of the trends is moving up as high as I can see is 3,800 at the 6.854 key level of Andrew Pitchforks.
Okay, wonderful. Nick, let's talk about demand and headlines. Nick, what are some of the things that you would love to wake up to if you're bullish gold? Some other than war breaking out. There's an old joke in markets. What do you do on rumors of nuclear war? And people would say, well, you sell everything on nuclear war. And they say, no, you don't sell anything if there's rumors of nuclear war. You buy everything, because if the rumors are true, it doesn't matter anymore. And nothing's worth anything, but if the rumors are false, it's going to bounce back, and hopefully that's the case. But there are a lot of things that can drive gold higher from here. What do you think can be the top catalysts right now?
Look, I think this is from the physical side. I think for us, we would summarize it in two things. Number one, chaos. More chaos, the higher the gold price is going to go. I mean, we've all spoken about it. You mentioned Trump. If he's mixing the pot and no one knows what to do next, they want to run to safety. So that's number one. And then the second thing is diminishing supply. There's always a recycled amount that comes into the market. About a third of the gold on a yearly basis is recycled gold. But the reality is there are, I mentioned it earlier, fewer and fewer mines, more difficult to get the material out the ground, and in locations that are hostile. We mentioned Mali at the beginning of the session. And you can name them. They're places that you don't want to go to on holiday, unfortunately. And so I think over the longer term, you've got those two things. Bullish gold, more chaos, less and less supply, and it's a case for buying gold, at long gold, effectively. If it goes the other way, so more stability and excess supply, I know you didn't want to talk about supply and demand, but I mean, that's the reality, then the case would be to short gold. You'd think, take the other side of the position.
What are you seeing on the supply side, though? Is there investment? We look at it in the local market here. It's tough to, and in Canada as well, where I'm from, it's very tough. Junior gold mining capital raising is gone. And so, in that long-term supply arc, is there ever going to be a boom in opening mines, or are we anywhere near that point?
Personally, I don't think so. I think the easy low-hanging fruit has already been picked. The deeper, more difficult stuff is still there for sure, but it is just genuinely harder to get. And the reality is mining is not sexy.
Even here in South Africa, is there exploration happening here?
On the gold side, no. They're mining out the pillars of the last old remnants from the 1980s and 1990s steep level mines. There's effectively been no new exploration in gold probably for about 20 years. The only shaft that has been sunk in recent times is the Platreef mine up in near Potgietersrus, and that's a platinum mine. So there's effectively no real new exploration on the gold side, certainly in South Africa. Central Africa, Congo, those areas, definitely that's on the go. But again, it's difficult locations. It's hard to make it work.
Even in Canada, they're way up in the Arctic now trying to find gold.
Yeah, exactly.
It's very difficult.
Canada's cold. It's a hostile, physical hostile environment, and it's hard to get the material out there. So the reality is, there's not going to be a boom anytime soon. And as soon as a new gold mine does open, it's hard to actually make money out of it because you've got genuine inflationary costs. Your diesel costs more. You're in a further location. Your labor costs are higher. So whereas you thought you're making money at $3,500 an ounce, all of a sudden your costs are $3,000 an ounce because it's so difficult to get it out. So they're chasing each other. The costs and the revenue are chasing each other the whole time.
Zulpha, we talked a bit about China, and I want to circle back to that. Or Francois, whoever wants to jump in. We had, if you're a Chinese investor, and we were talking about the amount of money in China, it's just stratospheric. I mean, we say it over and over, it's the biggest middle class in the world. And it's just hard to grasp that there are more customers for Nike shoes in China than there are in the United States. When you think of America, it's so big and so rich, but there's this amazing amount of money there, and it's capital constrained. You can't, taking money out of the country is difficult for many people. So you had generations of people that invested in local equities that have done poorly until recently. And then you had real estate, which became one of the all-time great bubbles and has really struggled now. So a lot of that money has pivoted into gold. And is that a sustainable source of demand for gold? And if you look out, when I look out 20 years, the real estate market in China is going to struggle because of demographics. You have, at some point, a falling population. And so that just takes out that pillar of demand for real estate that's going to work its way into gold. Is that a sustainable trend?
Personally, I believe the answer is yes and no to that. Okay, so from the first part of that question is, yes, there is a tremendous amount of money in that part of the world, and yes, it is really driving buying power at this point in stage. But at some point in stage, investors normally get to a point where they like to sell, where that take profit level is normally. So that could always create certain retracements, but I don't think, and similar to what he stated earlier, is like in that regard, there is a certain floor of how far it can come back. And I don't believe with something as tangible as gold, we can truly have what we would normally think about as the real estate bubble that we had back in 2008 or anything in that regard. Because looking at what happened back then, there was a lot of additional contributing factors that we don't have with the gold rally that we are currently experiencing. And the same as what Nick just discussed as well with regards to the supply of gold becoming less and more expensive. This is also, continuously driving that value of this asset that we are holding and that safety that's attached to it. And I mean, we can actually see it even if you're just looking at normal charts in the market at the moment. If you're looking at previous data, stock markets and gold used to go in opposite directions. Now they are following in the same trend. So yes, even where there's a certain risk on sentiment with regards to stocks, gold is still trending up. So there is still that continuous demand for it. So looking long term, there is definitely a possibility for this thing to just keep going higher and higher.
Shah, what are some of the charts that you look at, in terms of correlations with gold? Things that are moving with gold. Do we have a stocks? Should it be interest rates going down? Bond yields going up was sort of negative for gold, and now it's a positive if we get these fiscal questions.
Yeah. So the correlations should be dynamics because we know that gold is safe haven assets. Yeah. So I always looking at Japan. Yeah. So when the Japan interest rates or dovish stance, gold tend to go higher. Yeah. But besides, because the dynamic of the sentiments that you need to go for the analysis. So from Japan yen, you can correlate with the US dollar index. Yeah. So now we are looking at US dollar index to cut the interest rates. So high probability the US dollar is going to be lower. Yeah, going to be weaker. So the correlations of gold, it could be bullish for golds. Yeah. Yes.
Great. Zulpha, what do you see as the role of central banks in gold right now, and the demand from central banks for gold? Do you see increasing demand from central banks, or is that overstated?
I do see an increase from central banks, definitely. If I can say, obviously, like you said, there's a lot of things that is currently driving their demand. So there's definitely going to be an increase from the central bank side.
Yeah, are there certain parts of the world where we're seeing more of that? We have these countries in Russia, obviously, would be buying more gold. Are there other places where we're seeing demand from central banks really kick in?
Sorry, Adam, I didn't hear you.
Are you seeing demand from other parts of the world? Sometimes I see the data coming out of Turkey, very strong buying. Poland's central bank buying. Asia as well. Are you seeing?
Definitely.
And what's driving it? You think are they trying to diversify from U.S. Treasuries, or?
There is a diversification that is coming. We definitely can see that, right? So obviously we can see that. Obviously not only with gold, we see. Sorry. We can see that so there's an echo in my ear.
Good. Yeah, we can hear you.
Okay. Yeah, so like I was saying, you can see it from Russia, you can see it from Asia, we see a bit from Europe. So yeah, we do see that coming.
Okay, guys. Okay, we're all pretty bullish gold on this panel. Give me a sense, just quickly, where you'd get worried about the gold price. Really worried. Can we get to 4,000, 5,000, 3,800? You mentioned as a top.
Possible.
That.
I'll get worried around somewhere between 3,500 and 4,000. That's going to be a serious high point where I believe we'll start seeing some massive retracements, and then again we can take it from there. So yes, definitely, there's still some room, but anywhere in that area, there's definitely going to become some room for concern.
Nick, any thoughts on? I mean, on the physical side, is that something you worry about very often?
Yeah, it's a tough question because there's no real answer.
Well, okay, so let's say you are bullish gold. We talked about miners a little bit. How do you want to be bullish gold? I mean, should people be thinking about leverage? Should they be thinking about miners? Should they be thinking about ETFs or actual physical gold?
Look, I think ETFs are always a nice alternative to holding physical, simply because you can trade it quite easily.
Or CFDs? I mean, there's a lot of ways.
Yeah. You don't have to take it to the pawn shop or get your brother-in-law to buy it or anything silly like that. I think the price has had a good run. I think honestly, there's going to be some normalization and stabilization for a while. It's all linked, in my view, back to inflationary pressure, interest rates, and the global economic situation. But my feeling is it's kind of topped out a little bit now, and I can't see it growing I can't see it going too much higher in the near future, which is only 6 months.
Maybe it's so scary. Do you have any thoughts on how high you think gold could be going?
I would say 3.5 is what I
Five. Okay. All right. We touched on global growth, and we haven't gotten to oil too much, but you know, a lot of these things go back to global growth. I mean, we have OPEC to worry about with oil, but where are we right now in terms of global growth, and what's worrying you about? What's worrying you about global growth? We've seen a lot of the data come through. Listen, consumer confidence went in the tank, and people kept spending. And now you have all this fiscal stimulus coming from Germany. You have always Japan spending it, China turning on the fiscal taps. Where are we? What's anyone's sense of where are we in the global growth driver, which I think is going to be the surprise driver of oil if we get there? Yep.
Yeah. The concerns now is in Asia. Yeah. On the coronavirus. Yeah, because I've seen the oil market on the coronavirus times, it went up to zero, and with Trump administrations. But of course, the Middle East also is a concern on the Red Sea. Yeah. So anything happens on the Red Sea, the war is happening, it could disrupt the oil supplies. Yeah. But I've seen oil now is in the descending channels is going down. So it's trading lower and lower and lower. So I believe that if anything happens in the Middle East, it can drive oil to go lower.
How much lower?
Yeah. Maybe $40
All the way to
per barrel.
40.
Yeah.
So that's a negative global growth scenario, or it could come from OPEC pumping more.
Yeah.
Maybe we're getting announcements even this week about OPEC adding more barrels.
Mm-hmm.
At some point, the contrarian trade would be short gold, long oil.
Yeah, but there's Trump's went to Middle East and have a good relationships with Dubai.
Is there a connection there? Is that for real?
Qatar, the oil country generating oil in the Saudi Arabia. Yeah, so Trump's have a very good relationship with the Middle East now.
He has a good relationship with Texas too, though. And $40 oil is that what happens if we get to $40 or below 50 even?
Well, below 50. Yeah. So if below 40, 50, I think it's very common. Yeah.
You think? But do you think that tees up an incredible spot to buy oil? Pardon.
Definitely, and I do believe, again, 40 is a good place to probably start buying oil in that regard. Anywhere under 50, most possibly. But I also think we need to take a little bit of a bigger approach to how we are currently looking at the oil price, and not just from a global growth perspective. I know, yes, normally oil was that indicator of how various economies are doing, and if we are looking at China is still the largest consumer of crude oil and so forth in the world. But if we start evaluating other aspects to what is currently affecting the oil price as well, again, what is bullish for gold at the moment is most probably bearish for oil at the moment with regards to certain geopolitical events in the Middle East that is affecting this at the moment as well. And then we have regions like Europe and the European Union that is putting various regulations in place to combat or counteract companies and various institutions that are not environmentally friendly, and that entire ESG approach to loans and investments being done from various companies that can be affecting the oil price as well. And then even in looking at the US, we've got that large adoption of EV cars at the moment as well. So I believe there's so many other factors globally at the moment that we've never previously had to take into account when factoring in how far oil can drop and how far the market can go before that bounce back will happen,
Yeah,
that we
it's-
definitely have to take into
I
consideration
mean, and
as well.
you look at charts, right? And you can see you go always the history in charts. But history's not inflation adjusted, right? So, $40 oil today, it's like $25 oil even 6 years ago.
Yes.
And you've had some technological advancements, but we're really even at levels right now that are very, very painful for a lot of oil producers. But to go with that, but also to touch, to bring you back in, Nick, the nexus of a lot of this is the Middle East. What do you think is going to happen in Iran or Zulpha? That I think is really when we talk about the U.S. is negotiating with Iran. What's priced in? Trump he's an interesting guy because he's hawkish. He talks very hawkish, but he seems to be a peaceful guy. It's one of the nicest things you can say about him. He doesn't seem to want war, but the U.S. and Iran are in a very difficult place right now.
I just want to take a step back and talk about global growth for a minute, and then we can get to
sure.
Iran. One of our favorite statistics to quote always is the steel production. So in China, they produce, give or take, about 1 billion tons
It's crazy.
of steel every year. And in America, that's the USA, in North America, they do about 150 million tons a year. The EU is about the same. Russia's about 100. And India is about 100. All of those places except India have effectively topped out on their steel production. So steel goes into everything.
Yeah.
Windmills, solar panels, power plants, housing construction, roads, everything. The only one that's really growing, and I mentioned earlier, is India. So India's plan really is to go from about 100 million to about 300 million tons a year of steel. And all of that gets channeled back into the country. So from a growth perspective, I think everything's going to be sedentary in the rest of the world, 2, 3, 4% kind of numbers. I think India is going to be on the plus 5% in the next few years. And I think they're going to be a real engine for growth longer term.
Not Africa yet. Maybe one day.
Africa has real structural problems. And I mean, there are real issues that need to get sorted out. And yeah, I don't know. I think that there are a lot of solutions that need to be put on the table, and people need to thrash it out. Africa's time will come, but I don't think it's going to be before India.
Do you see though any case for upside from China?
Say again?
From China.
About what?
Do you see a case for upside growth there with some?
No, I think, like you said, I think
is anyone optimistic on China?
Oh, if you're talking about oil, the biggest producer of EV cars is China now.
Yeah.
Yeah, so I think
It's and it is going to be a drag on global growth, but you have the biggest growth in aviation right now is from China,
Yeah.
and the electric planes are a long ways off. So,
Yeah.
and India as well. I mean, most of the people in the world still, I think 80% of people in the world have never taken a flight, which is another mind-blowing statistic for demand. Does anyone have a thought on the Middle? I mean, we're not going to solve the Middle East today, Zulpha, but do you have any sense of Iran or what the risks are there around for gold and oil?
On the oil side, obviously what we see whenever oil price of that normally stabilizes the
Oh, here, take a
Zulpha,
sorry.
your
My
mic.
mic's dead.
Okay, sorry about that. So
Yeah.
okay, as I was saying.
Yep.
As I was saying, obviously, with oil, I'm not too worried on the price of oil because that is normally stabilized by the OPEC block. So obviously, they sort of control your supply and demand with that, whether they're going to make more, not make more. So I'm not too worried on the price of oil.
Well, that's a nice optimistic message. We have some time for questions. If there's anyone in the audience who's eager to ask a question,
Keep it.
throw a hand up, and we should have somebody come around with a microphone. Yeah, she'll just be right there. I mean, I think we are. Yeah, throw a hand up. She's just behind you there. Do you have a mic? Oh, you got to
No,
get.
you've got the mic.
Okay.
Oh.
Sorry, we're short on mics here in the full.
Oh, thank you very much. You talked about levels where gold might become very expensive and you might see sellers? Given that anyone who sold gold recently has been carried out bleeding pretty badly, what sort of institution would you see as being, central banks, potentially long-term buyers? What sort of people? Is it financial funds that come out selling it, shorting it, or who are these people that would be brave enough to take profits in gold?
Personally, I think in that regard, we're not really just looking at people necessarily entering into short positions to sell gold in that regard, to take that risk. But if we are looking at larger institutions and if we're looking at that larger investment pool, there is the chance or there is the opportunity for them to basically, just take profits on gold, not necessarily to go short on gold, and kind of wait for the market to dip back a little bit and maybe just repurchase at a lower price once more. So I think from larger institutions' perspective, that is a possibility in that regard. But as we spoke about it earlier as well with regards to the various BRICS countries and central bank demand on that, that could just continuously drive the price higher. And the dips we might see will be very short term, kind of similar to the one we just experienced, where gold got to that relatively high point. We just saw that small pullback of about 100,200 points in that regard, and then a consolidation with potential upside once more. So that could be the progressive flow from where we are standing at the moment.
And go ahead and ask another question. But as we're talking about that, central banks have that decision to make whether to buy treasuries or whether to buy gold.
Yeah.
And right now, we had countries sell out of gold altogether, and I don't see any of that happening anymore right now. But they might start buying more treasuries instead if we get some stability. Go ahead.
Hi guys, I hope I can be audible. Can you hear me?
Yep, nice and loud, please.
Okay, cool. Thank you. I have 3 questions. Somebody mentioned India and Africa.
Well, maybe let's just keep it to one here. We're running short on time.
Okay, no problem. Let me just ask the most important one. Somebody mentioned India and Africa. So I wanted to know, because these are the most 2 powerful emerging markets, the demand. What impact will that be on the oil and gold in the next 1 or 3 years? I want to hear somebody honest opinion on this.
That's right. Hey, did anyone catch all that? What impacts the demand for oil and gold?
Let me say it again. How will the emerging markets, which somebody mentioned
Emerging
now,
markets.
yes, which somebody mentioned now, the India and Africa.
Yeah.
I'm talking about the demand now. What would be the impact on oil and gold in the next 1 to 3 years?
Well, I think it's material. I mean, that's what you talk. India is such a big one at the moment. But it's been a steady, almost 7% GDP growth for a while, and it's up. It's been one of the few surprises to the upside. I look to China, and again, is China spending? Are they cutting rates? Is China trying to rebalance their economy or accelerate their economy? The rest of the world, we are seeing Southeast Asia some growth there. Do you have any thoughts on? You touched on a little bit of some potential sources of growth. Are there other ones that you're watching? You're in Southeast Asia, Shah. How is the economy there in Malaysia and a massive amount of people in?
Yeah, I think it's because of the US dollar is weakening. Yeah, so our rates are getting better. Yeah, that's one point. And of course, in Southeast Asia, the EVs is coming, the electrics. Yeah, so most of us are into the electric EV cars. Yeah.
Well, it gets to another question. I mean, if we have a weakening dollar persistently, you can have a lot of good things start to happen in these places. It brings down inflation in emerging markets. And I think a lot of this trade around gold and oil comes back to a dollar trade more than anything. And if we have, and it's important to keep in mind that 20 years we've had a bull market in the gold, or at least since the financial crisis, in the dollars, pardon me. And if that's starting to unwind, a lot of commodities can do very well, and a lot of emerging markets can do very well. But we're out of time here for this panel. We're going to have another panel next on prop trading, which I think is going to touch on a lot of these same points and hit some real high points. I want to thank my panelists so much for joining us, and thanks for coming out. Let's give them a warm round.
Thank you.